Casey's General Stores Inc., NASDAQ. Casey stock fell 3.93%, as on June 7, 5:26 a.m. Coordinated Universal Time -4. Source: Google Finance. After the company posted lower than expected results for the fourth quarter of FY23. Casey's closed out its three-year strategic plan with another record fiscal year for its shareholders, highlighted by 19% EBITDA growth and 31% diluted EPS growth. Inside same-store sales per 4. Med-Well, up 6.5%, or 13.6% on a two-year stack basis, led by alcoholic and non-alcoholic beverages, as well as strong performance in pizza and bakery. The company continued to strike the right balance between fuel gallon volume and gross profit margin throughout the year to drive fuel gross profit up 15.7% from the prior year. The team did a tremendous job managing cost as same-store operating expenses excluding credit card fees were only up 2.8% versus the prior year. Finally, the company is operating 81 new stores, finishing the year with 2,521 stores. Casey in the fourth quarter of FY23 has reported the adjusted earnings per share of $1.49, missing the analysts' estimates for the adjusted earnings per share of $1.58, according to the Zacks consensus estimate. The company had repo RTED the adjusted revenue of $3.33 billion in the fourth quarter of FY23, missing the analysts' estimates for revenue by 2.21%. Moreover, total inside sales were up 8.4% for the quarter and total inside gross profit was up 8.9%. Inside same-store sales were up 6.5%, or 12.0% on a two-year stack basis, driven by strong performance in non-alcoholic and alcoholic beverages in the grocery and general merchandise category as well as bakery and hot food in the prepared food and dispensed beverage category. Inside margin was up 20 basis points for the quarter primarily due to mix shift to higher margin items like grab-and-go beverages in the grocery and general merchandise category as well as increased private label penetration versus the prior year. Same-store gallons sold were flat for the quarter. Fuel gross profit was down 2.2% due to a decrease of 1.6 cents per gallon partially offset by a 2.4% increase in total fuel gallons sold. The company did not sell any renewable fuel credits RINs in the fourth quarter, while $1.1 million in RINs were sold in the same period last year. The company expects inside same-store sales to increase 3% to 5% and to improve inside margin to approach approximately 40% to 41%. The company expects same-store fuel gallons sold to be between -1% to +1%.